Good morning, everyone. Paul Duncan here with GammaEdge. It is Thursday, March 17th. Let's get started. The index structure, even with yesterday's remarkable advance into the close, is still showing net negative gamma. And when you look at the wing charts, when you print these in the Discord, you'll see that the red wing, which is the cumulative net gamma, is much larger than the call side, the green wing here. You can see, if you go back and look at previous days, you can see that actually the call wing is growing, but nevertheless we're still across the board, we're in net negative gamma condition. For that reason, although it's improving, we'll give it the green light, but I'm going to put a cautionary on here too, for reasons that you'll see. When we take a look at tomorrow's one DTE structure for each of the indexes as well as the ETFs that represent those indexes, you can see that when again looking at the wing structures here, net negative gamma across the board is expiring, and typically this can fuel an upside move. So we're going to have to watch this pretty carefully and see. You can see on the SPX it's a little more balanced, the SPY not so much. The Qs definitely not, and the IWM small caps definitely sitting with the dominance on the put side. Just remember that the spot price in relation to these large spikes controls the moneyness, and that has a fairly significant influence. We'll hold a separate seminar on that and what we're seeing with that. When we take a look at the market model, the short time upside, we think a reversal is underway, but it could be short-lived. There's a number of reasons for this. When we take a look at circle 1 up here, this is the 52-week new high, new low. This is our breadth indicator, and you can see although we stopped hitting new lows with this push up yesterday by the institutionals, nevertheless it's still bearish. We have red over green. The yellow line, which is the net between the two, is negative, and any time that this is negative is telling us that more stocks are hitting a 52-week low as opposed to a 52-week high. We need this to reverse to have any confidence of going long for any duration in time. Also, while I'm up here, this is the filtered cumulative tick, and you can see that most of the day yesterday it was positive. We did get some sell-off into the FOMC, and then it took off afterward. And it was pretty strong afterward, obviously, as you can see with the SPX superimposed on the overall chart here. When we look down here, that started after the commentary, and we really closed at new highs on the cumulative tick into the 4 o'clock session, 4 o'clock time frame. And that's a pretty important thing. A lot of monetization of puts occurred at the same time, and we also think that calls were opened up, and that helped drive us north. Circle 3 here, I just want to highlight we are still in a longer term down market. We have to get this white line here, which is the instantaneous cumulative tick. We've got to get this thing above where we've been in the past to have any real confidence of moving into longer term swing or position trades. When we take a look at the ES, I am showing the ESM 22, which is the June contract here, as you can see. Key things to look at here, we're up here at 5,000 for the call open interest. That's a fairly significant change. We've been at 4,500. So yesterday this did move up quite a bit, and I think that's important for us to realize. You can see that the short-term gamma exposure with respect to just the dominance of the level is at 4,500. Again, these are all single expiries, but we do have, even though we have massive COI up here, we've got another level sitting here at 4,500. So as this price moves up, these folks, their deltas will become longer, and they'll have an opportunity to monetize. And where they put that money is going to be fairly important. This is a much smaller view of the overall market, but we do watch the ES because it is a single expiry, and we do think it can tell us quite a bit about what market sentiment is. When we take a look at where the prices are right now, we're at 43.36. When I printed this off, We're actually right in the middle of a transition range defined by this yellow line here and this red line here. This is minus transition, this is positive transition, and so we actually could see some volatility in here. There is no real definition. Net negative and net positive gamma exposure go back and forth in this range, hence why it's a transition zone. And until we can get above these levels or below these levels, we really don't have a clear definition on where the market could potentially go. To the downside, 40 or 4,000 remains the downside target in the ES. We have actually dropped in negative gamma, especially with the transition, the rollout to the Junes, and so a lot of these puts are way out and are not having a major impact on the overall structure. I do note that the VIX has come down and has remained down overnight, which is good. For that, all these different movements here, we're going to go ahead and color this green with a yellow cautionary because we are in this transition zone. When we take a look at vol-a-vol and when we take a look at VIX, so vol-a-vol continues to drop. It's actually hitting up against the -2 and -2.3 standard deviation on the downside. You can look back historically or print this off yourself. When we get into these areas, it's actually worth looking at as a trade. We like to see vol collapse, and that's always a good thing. And then over here with the VIX, excuse me, we do like to see it below the 20-day moving average, which is, you can see, is 30.53, and we're down here in the 27 range with a first standard deviation Bollinger Band down here at 25.53. So we would like to see this come down, continue to play the VIX collapse until you can't. Shifting gears here a little bit over to the SPX, I think it's important to note that we've had the redistribution of the expiring structures for today's last trading day of the monthly SPX, the AM settled. This is the last trading day for monthlies. Tomorrow morning at the open is when the monthlies settle. So we're going to see, or we have already seen, quite a bit change hands. This number here has dropped a dramatic amount. Now, you think about that, we've moved up a tremendous amount in the overall structure, and the fact that this has moved down so much means we've seen a lot of monetization already take place. When we take a look at the end of the month monetization, that is all, or not monetization, expiry that is going to occur. This is largely due to the JPM hedge that's in place right now, and then we push all the way out into April with the monthly, and you can see the magnitudes are relatively the same. So very interesting change in the overall structure. Next week is looking a little mixed when we see dominance of positive gamma appear. Typically, depending on where we are in the overall moneyness of that can actually be some additional volatility, and we might see some more downside as these are monetized. So we'll have to watch for that and watch for some developments today and tomorrow. Today, as I said, is the last trading day for the March AM settled SPX. That's fairly important. I do note we had some questions come in overnight, and looking at the gamma structures, we are still net negative. Now we've here at Circle 2, we have decreased the amount, meaning we've moved more positive in net negative gamma structure than we were yesterday at this time by a significant amount. We've cut that well in half, close to 60% reduction. That's fairly significant, right? What that means effectively is that the downside gamma is not having as much of on the complex, it's not having as much of an impact. The JPM is up here at Circle 3, that 45.10. There's 43,000 long puts on our side of the table, which means the dealer is short those 43,000 puts, and that has implications, of course, as we move up. 4,400 remains an upside target, and then on the downside, 4,300 is one of the closest net negative gamma levels for liquidity. I want to highlight two other things here. First of all, we've had a significant change in deltas below spot here at square 5. This is a change in the overall SPX structure, and this shows short-term support as far as we're concerned. So we're looking at this and watching this pretty carefully, that we think that we may continue to remain in this area, in this transition area. We'll have to wait and see, especially with today's expiry. I want to point your eye over here to Circle 6. This number now, it says 24%. Yesterday, I think it was up near 35%, and when you combined it with the overall where we've been for the week, we've ranged between 34 and 39%. So the monies have largely been distributed for the expiries, and this is inclusive of both today's expiry as well as tomorrow's PM expiry. The last slide here I want to highlight for you is, skating to the puck, where are we headed here? One of the things that's a little concerning to a certain extent is that as I remove next week's expirations and I start looking at the relative change in the gamma structure, it doesn't really move, right? So today, depending on what happens, obviously today, tomorrow, the key takeaway here is that if I take away through next Friday's expiries, we're not seeing a tremendous build of this number. We're not moving, not advancing with today's structure, with the data we have today. We're not advancing to a positive gamma environment. We think that's fairly significant. In looking at past models, we really need, as we turn off these future expiries and start looking at the data, we would like to see that as we march through time, that the puts vaporize and that we become more positive in our overall gamma structure. We're not seeing that at all right now. We think that is important to watch, especially as we approach the end of the month with the JPM hedges up here at 45.10. It's going to be hard. We think it's going to be hard to catch a tailwind and move up aggressively. And if we do move up, just saying, we've got this 4,500 level to contend with. A large number of calls are sitting there. You can see where the relative magnitude is. We got 130,000 here, 126,000 here, but then sitting right on top of that, we've got in the combination here a significant amount of puts that will flip the models or play havoc on where the zeros are. So we're going to watch this pretty carefully. But right now, if I had to call it, I'd say we're going to have a hard time getting up over this level, and more importantly, I think we're not going to go positive gamma in overall conditions. To the downside, look what happens as we remove these expirations. We lose a lot of the liquidity, and we keep the 4,200 level. This does suggest that a downside target starts to emerge with no relative magnitude to the upside, and you can see that the distances are relatively consistent here, so we would expect to see some major level up here, and we really don't have it. So my bias right now is to the downside, but we could also drift in this area in these transition zones. So that's it for today. Lot going on obviously with the AM last trading day. AM settled SPX, and then tomorrow, of course, with the PM settled, and the index ETFs also expiring tomorrow. We do think overall that the viewpoint through tomorrow does support, because of those puts that are potentially being monetized. We could push higher. We don't think we're going to stay there, and then certainly what you just saw in that last slide suggests that we don't ever get out of this negative gamma condition, at least not with the structures that we have today. Hope you found this useful. If you did, please come and join us at www.GammaEdge.us. That'll take you to a sign-up page, which will get you into our Discord. 14-day free trial, everything turned on, all the tools there, a lot of commentary, a lot of discourse going on, voice chat, which is very active, where we have a lot of seasoned traders and calling out what we're seeing, etc. You can also follow us on GammaEdges with an S on Twitter, and of course you're watching this now because I've moved exclusively to YouTube, so please like us and follow us on YouTube, and we appreciate everything that you're doing. Make it a great Thursday. Thanks.